Silicon Bank is falling. Short sellers that has taken advantage of this shares falling, making around 500 million of SVB's demise. And it may start the global contagion collapse of many industries, and there are some questions we need to answer today. Is everything around this 16th largest US bank overblown, or is it that serious? So today, as it's time change in the US, we are transmission a bit earlier in Europe, but that stance will last throughout this week, as we have another time change in Europe. So if you're just watching it out this continent, please take an attention to that fact. All right. So without any further ado, let's head on to the next episode. All right, economy view. As we do know, it's the first section for today, and the topic of the episode is the Silicon Valley Bank failure, and that's the one of the aspect of the economy that has spooked investors to that extent that many of US indexes has fallen by a few percent right here. Even German DAX has slided by 3% or over 3% today in the morning. And right here you can find that this is what happened. So SVB was the 16th largest bank in United States at the time of its failure on March 10th of 2023, and the largest bank by deposits in Silicon Valley. And what has led to this? So Silicon Valley Bank was the large lender when this cheap money era has lasted. So when we had interest rate level at neutral or negative levels, there were very, very cheap money. Right now, we are saying goodbye to this environment, to this reality, and right now we had to get that loans back, and that's what we do know. It's getting more and more costly with hiking interest rates even further, and that's what we have expected. With hiking interest rates, we will see some cracks in the economy, and it may last throughout this and the next year at least, as we hadn't have such high interest rate levels since 2009. So is it just the beginning, or can we expect the recovery of the economy? Right now, the customers of SVB are running a bank like crazy, but we have been assured that that customers with deposits at this bankrupt SVB will have access to all their funds from today. The Treasury Department, the Central Bank, and the Federal Deposit Insurance Corporation announced. So there was a question about Signature Bank, and customers of that bank will also receive their money back. So it was a bank focused on technology clients, and due to this enormous technological rally on Nasdaq throughout past at least 5 to even 10 years, we've seen that this sector was entailing a bigger and bigger interest upon time. Right now, after such slide, when you had a Nasdaq around 30 few percent from its peak, right now much more investors has started to outflow, and that's what happened. And that right now, those problems may pile up. So Fed tightening has meant interest rate hikes. Higher rates meant higher bond yields. Higher yields mean lower prices for those companies. And with such restrictive policies, there are no takers to finance cash-burning businesses, and SVB had to sell significantly discounted bonds of $1.8 billion. That's what has happened. So what about the bailout? As when the bank of such sizes is collapsing, the always returning question is whether there might be a bailout, as it was back with Lehman Brothers. Right now, Mrs. Yellen rejecting such scenario, and that's what making many of market bulls much more dreadfully positioned to risk assets than it was before. One of my scenarios is that when after reassessment of the cracks in the economy, Fed will eventually lean back and will try to help institutions through liquidity programs or increase deposit insurance. In this situation, the bank may have the power to continue tightening. The markets will be happy at first, but after some time, the problems may come back with a vengeance. Fed in panic will resume quantitative easing. So right now, it's too early to start quantitative easing in order to rescue the economy. We still have a serious threat of rising inflation. That's why I wouldn't expect Fed to pivot right now. But the market expects it, as we will find out in one of the next slides, more than ever before. They desperately want this pivot, but will it happen right now? I don't think so. It's too early. There are paradoxically too few problems in the economy. So Fed is on the way to crack much more, and that's why for now the stock market will probably fall before rising again. So ventures are in trouble. And the venture capital community needs to come together cohesively and put out a statement in support of SVB. So that's to have been put up. And the first, as we had seen, the first were falls of unregulated markets, of crypto. There was an FTX case. Right now, those regulated bigger puzzles are falling apart. So it means with this lower liquidity environment, there will be much more issues that Fed would need to patch this year or another. That's why markets are getting more and more afraid of exposing to risk. So liquidity cracks, and even without strong QT, as we do know, that's the chart of US banks' reserves and lower bound. After UK gilt crisis, we can find that Fed hasn't continued to take that money off the table as it has supposed. So the question is, can authorities operate in the direction of financial stability during even a time when this QT is not in a full throttle? That will be much harder to assess than we thought before, as the cracks already started and QT still might have its largest consequences in the economy to come. So a pivot is expected more than ever, as I mentioned, as right now target rate probability history for Federal Reserve meeting on 22nd March are right now dropping after this event back happened on late Friday. So it looks like much more problems are reassessed by market participants. So let's right now find out what about the major indexes. And for this one, as we right after market opening on SPX, we are right now trying to find a bottom around the levels of 37.600 that I mentioned before. So that's where I'm just putting down my next support line. But as we would know that after this break of head and shoulders pattern with this acceleration on the right shoulder, we do find that objective for this formation, as a reminder, gets us to 36.6, so it's still around 4% lower than we are right where we at now. So 36.9 might be the one that that may get us some of the pivotal moment for this impulse, but as we do know, this havoc right now is getting much stronger with news, the new informations, new data coming up out of the possible of market contagion that comes out of this collapse of SVB. So SVB might not be the last one, as we do remember that there is a Credit Suisse that also had such cracks, and this might may cause even a much more serious troubles for the government if the Credit Suisse won't have the chance to stave off those allegations of being out of money. So SPX and US 100 right now are slowly but surely sliding downwards. Whether the next stop will be right at 11.5 or 11.25 is still to yet been decided, but I do expect there is much more that there is a higher likelihood of getting rather to 11.29, especially with SPX having a possible ride much more downwards than just 1.5%. That's why I wouldn't any type of falling knife catching might be unreasonable for this moment, and you need to wait if you are the market bull. Otherwise, there is a nice nice chance still to take a short position from here that we'll get through in a second in a traded section. So that was about market outlook. Let's find out about crypto, as recently also has suffered. So USDC might become a victim of Silvergate and SVB, but we still have a chance to save it from losing a peg. So USDC is this one of the stable coin that has been verified and regulated by Circle, renowned company out of the technological sector. And USDC has recently have problems due to this FTX fall and Alameda Research alongside that were one of the largest clients of the bank, and that has caused the first cracks for the sector on that scale during this cycle. And right here we have found that after this SVB collapse, USDC lost its peg to the US dollar hours after this SVB entered FDIC receivership, and amid uncertainty about how much of its funds were actually held in the bank. So right after we had a clarification that Circle eventually said it held $3.3 billion, or about 8% of the funds back in USDC. So right here we have a rebound on the crypto markets, but still those things as recently happened still weigh on the eventuality of next turbulences that may come over to this unregulated and still a major sector. So that's many things to watch, and we will get you updated on the thing. So if you have any question, just put it in comments below, or if you are live, you may put up some questions live that I will have the chance to get back to them as soon as possible during this transmission. All right, right now let's head on to next section, that's market movers, and let's find out what we need to pay attention to this week in terms of making investment decisions. So on Tuesday, as on Monday, we have President Biden's speech on banking system. So that's also important to find out what will come out of it. So tomorrow I will get you updated on that. Next, on Tuesday, we have an core inflation rate out of US. So that's important, as we would like to know. We need to know what this inflation rate may eventually come out. Recently, we had the consumer price inflation rate at below 6% levels, but this trajectory has been slowing down. This pace of fall has been slowing down. That might be bothersome to analysts. And right after, we have industrial production out of China. As of next, PPIs of US on Wednesday, a balance of trade, building permits, and ECB interest rate decision. That's what everyone is waiting for. As recently we had those slides on major European markets. That's why this ECB decision will be of high importance for all of the market participants. On Friday, we have Michigan consumer sentiment right there. Okay, so what about earnings calendar? Do we have any of important earnings this week? So today we have GitLab. That's not maybe of high importance, but for those interested in Nasdaq, that might be important. On Friday we had Futu that as we haven't an outcome of this publication. So Futu it looks like it might be postponed to some other period. All right, let's head on to all right, so on Tuesday we have Stoneco and Lana Corporation out of the largest and most renowned companies. On Wednesday we have Adobe that also moves many market Nasdaq bulls and 5 below as well. On Thursday we have FedEx, and on Friday Central's Electrobras that's out of energetic sector, and Xpeng out of the car electric vehicle company sectors. So right here we may right now get to the most, I guess, anticipated element of the transmission. That's a trade idea, and for this one I will jump to Nasdaq, as I mentioned. So right now Nasdaq is trying to get out of this box, of this I would say of this box that we have found in. So right below the levels of 11.82 we are trying to recover and possibly erase this recent move downwards. But right here, even though we'll manage to get to this 11.88, it's still too, I would say it's much more need to be done in order to get out of this sliding tendency. And what I do expect is that we'll eventually get to these levels of 11.9 or 11.92, but right after we'll start another slow move downwards to the levels of 11.55. So as you would find right here, such of a short position in my view is kind of interesting. I do expect we may even retrace to the levels of 11.98 and right after start sliding. So right here we can find that US 100 is the one that should erase some of this move downwards and move back to this 11.88 where I would start my short position from. So there is a risk-reward ratio at 3.85 in that case. So if you are just managed to keep this short even for longer, I would expect that US 100 will slide to at least 11.3. So that's where I would start to lowering my exposition to the type of asset. So I would find that the best risk reward entrance is within this rectangle. That's why I would expect that US 100 will at first move to somewhere between those lines of, as you find, 11.95 and 12.01, and right after achieving this level, start to reverse. So in my view, US 100 is going to play out that scenario, but as always, assess your risk reward profile and adjust your position accordingly. So in this position, I would bet against US 100, but as always, remember that there is a level that needs an exit as well after reaching 2. That's why an exit might be right above this previous highs of 13th of March that been set at 10 to 3 a.m. So that's it in today's episode. Thank you very much for watching, and if you have any questions, as always, just put it below the video, and see you tomorrow at 8:45 a.m. But remember about time change in US. That's why for Europe it's a 1 hour earlier. Thank you very much once again, and bye bye.